All right, we're in Wisconsin talking with Matthew. Matthew, welcome to Allworth's Money Matters.
Thank you. Good. What can we do for you, Matthew?
Oh, hi. Thanks for taking my call. And I just had some questions about capital gains tax.
Yep.
Regarding the house we currently own our house but rent it, and we've been renting for 4 years. We paid that house off in 11 years, our 30-year mortgage, in 11 years, and decided to rent it. So currently we're actually living in a house in my dad's name, who he owns that. And we're kind of living outside our means as far as being able to pay the mortgage. So we're looking at
I thought you said the mortgage was paid.
On our house that we bought.
Okay.
But my dad's house, we pay the mortgage on. So we're looking at buying the house from him, the one we currently live in,
Okay.
and selling the rental.
Okay.
So it's been difficult for us to find the information about capital gains. We'd like to avoid paying the capital gains if possible.
So
it can be as high as 20%, from what I understand.
Yeah.
Okay. So let's just go through the timeline here. How long ago did you purchase this now rental home?
15 years. 11 plus 4. Is that right?
Yeah, 2010, I believe. Yeah.
Okay, so 15 years. And what did you pay for it?
79.
And what is it worth today?
I believe it's going for 200 to 240.
And when did you turn it into a rental? What year?
That would have been 2001.
2001? So it's been a rental for 20
Oh, that's
sorry,
21.
Sorry, 21. Yeah.
So it's been a rental for 4 years.
4 years. Yeah.
And would you move back into this house? This rental?
I prefer not to.
Okay.
It might save you all of your capital gains.
It may save you all of your capital gains.
The challenge is a personal residence. We sell a personal residence that has gain in it. We're entitled to exclude $250,000 as a single, $500,000 as a couple of capital gains. So if this was your primary residence and you sold it, there's no capital gains to worry about. You don't have to worry about anything.
And what are the rules about taking a primary residence?
Is it 2 or 3 of the last 5 years?
3 out of the last 5.
Yes. So this needs to be your primary residence for 3 out of the last 5 years.
So what happened is when you converted it to a rental, in all actuality, you would have been better off selling that house
And buying the house next door.
Buying the house next door, because you would have reset the basis on the house, the property, and then you could have not avoided that capital gain, bought the rental next door, right? And then you would have reset your basis. But the way you did it, right, the IRS looks back to the original purchase price, not the value of the property
That's right.
the date it was converted
Plus
to a rental.
the depreciation that you've taken
You've got
over
to
the last
recapture.
4 years.
So, so your gain on this is going to be significant.
How close is it to where you are?
It's 3 miles.
And what was the thesis behind buying your father's house? Why that house? Was it to help him out? Is he living with you?
Or is giving you a big discount?
No, so they helped us buy this house. It's a nicer house. It's a nicer neighborhood, and it was just kind of like the idea that it would be a better investment if we rented the house we had just paid off.
Okay, so
instead of selling it.
So you said that you're making the mortgage payment. Is the house that you're living in now in your name or in your parents' name?
It's in my parents' name. But the idea is to, instead of buying that house because we own the other one, that they would put the money down to buy the new house, and we would pay the mortgage, eventually turning it into our house one day. But
well, there were multiple mistakes made there. Right? Your parents would have been better off because now they're going to have to turn around and actually either gift or sell that house to you. In which case, if they gift it, that's fine. If they sell it to you, then they're going to incur some capital gains.
Could you are you able to qualify for the mortgage? So the mortgage is in your dad's name, right? So
Right.
if they gift the house to you, could you get your own mortgage?
I believe so.
What's
Yeah,
the interest?
we have
What's the interest rate on your current mortgage?
the
On your-
current mortgage under my dad's name is 2.99.
Yeah.
Yeah. So you don't want to change suddenly refinance into paying 7% on a new mortgage in your name. That doesn't make sense either, right?
Do you have siblings?
No.
Do you have siblings?
I do.
Okay.
Yeah. Well,
So mom and dad pass away. What happens to the disposition of this house? Is it in the trust or in your parents' will? Is it a carve out that goes directly to you? Is it part of their estate? Does anyone know?
I'd have to ask. Yeah, I don't know. But the idea was that we would own the house.
No, I understand what
Eventually.
the idea is,
Mm.
but the idea doesn't matter unless it's actually identified in the estate, in your parents'
Sure.
estate.
Yep.
Wow. Well, what we do know is that unless you move back into that rental house, you're going to pay capital gains, and you're correct.
Maybe 30 grand.
Yeah.
Plus state.
Yeah. I don't know what Wisconsin is on
Yeah.
capital gains.
And then you have the other issue of that house not being in your name, but it's a 2.99% mortgage.
Right.
And when you say you cannot afford,
How much is the mortgage balance?
Well, when we moved in, they bought the house for a little over 3 years ago. It was $1,500. It's gone up to $1,700, and actually just now we got a letter that it's going up to $1,800.
A variable interest rate?
you got an adjustable rate mortgage on this?
It was because of the I forget the term, but it was it did increase by that much.
Did it? Did you know? No.
How much is the balance of the mortgage?
I believe it's around $250.
And so,
Okay.
is this an adjustable rate mortgage, or were these planned increases where you got a teaser rate and then it was going to accelerate, or is this always going to be adjustable?
I can't remember.
Yeah.
The escrow changed, I believe.
So, I mean, look, here's what you could do. You could sell the rental. Let's say you get $240 for it. You've got some real estate commissions. You've got capital gain tax. Let's say you net $200, $210 after it's all said and done.
Yeah.
You could then pay that mortgage way down, essentially buy the house from your father, and have a new mortgage of $40,000, $50,000 at a higher interest rate.
Right.
How much money does your family make?
And you paid the mortgage off in 11 years in your last house, so my guess is you can get this thing paid off in a few years.
Well, and that house was worth $79,000, so that was a lot easier to pay off. Put a lot of on the principal each year. And this new house sold. We bought it for. Well, my parents bought it for $310. So in 4 years, though, it's increased to $480, I believe.
How old are you?
43.
And you married? How many kids?
I'm married with 4 kids.
And what's the family income?
Well, with that rent, we're around 80,000.
And how much rental income do you receive off that house on a monthly basis? Net,
Monthly, $1,900.
but then you've got expenses. So what do you think after expenses?
We've
Lost them.
some other maintenance. I would have to guess probably $1,500.
Okay. And then
month.
what is your mortgage payment that you're paying to your dad now? $1,900, you said?
That just went up to $1,800. No, our income from the rental is $1,900. Subtract
All right.
the maintenance but the rental, or I'm sorry, the current house that we're living in, mortgage is at $1,800.
So, I mean, here are the couple options you have. Right. One is you continue to go with the path you're going down, which as time goes on, it's just going to create bigger problems.
Well, we don't know because he just said that it was in the impound account was what went up. So I don't know whether
No,
it was,
not about that. I mean, the capital gains on the other house is going to
Okay,
increase.
fair enough.
And then when the parents, how do you gift this house to the kid when you've got other siblings? So you could continue down the same path. Number one. Number two, you could move back into your old house for 3 years and save about 30 grand on capital gains taxes. Or three, you just say, well, we didn't do the best planning. Let's bite the bullet. Let's sell that rental house. We're going to end up with about 210 or so after 210 after capital gains taxes and expenses. Buy that house from dad. Have a new mortgage of around $40,000 or $50,000. Yes, the rate's going to be higher, but the payment's going to be tiny. Yeah, we won't have the rental income anymore, but the payments are going to be tiny.
Yeah.
Those are your options.
And I just like I like the idea of paying off the new house because it eliminates that
That's what-
long-term interest.
How old are your kids? How old's the oldest?
16.
Yeah, I mean the expenses are, as you know, as the kids get older, the expenses get worse.
I agree. I agree with. I would take I'd sell the house and.
You're my brother. I'd probably say sell the house. The only way to rectify this is to move back into it.
Oh, the thing I would worry about most is mom and dad pass away and
Problem with all the siblings.
there's a problem with all the
Nice
siblings.
and clean if it's in your name.
That is
Sure.
that's a big deal.
Although my guess is your parents are relatively young if you're early 40s. So
Anyway,
all right, Matthew,
appreciate the call.
Glad you called. It's interesting, Pat. As listening to this, there's a couple things that came to mind. One is, look, a lot of parents want to help their kids, and it's almost impossible. Like my daughter is 29. I helped her with a down payment on a house. She says she doesn't know. All of her friends have all had assistance from her parents. She says, I don't know anyone who owns their own home that didn't have some sort of assistance from their parents.
Kind of depends where you live in the United States.
Fair enough. Okay.
Your daughter lives in Denver.
Fair enough. Near downtown. Yeah, okay. She could probably, but even still. But the reason I'm bringing on the follow-up on this call, like, there's a lot of planning that needs to go into before you just gift your kids some dollars or own a home and let them suddenly take it over. The planning needs to happen ahead of time.
Well, this was filled with not major mistakes, but mistakes. This whole transaction.
Yeah. So if you're the parent, want to help your kids, like, do the right kind of planning, make sure you're talking to the right kind of people ahead of time, because it's hard to unwind. If you could just tell off this call some of the challenges.